Hi everyone, welcome to another Vina Edge video. Today we'll be talking about 4 frontier markets that should be on your radar in 2026. Right now, conflicts, economic uncertainty, and political instability across the globe are creating challenging times for investors. There are, however, some countries that might offer some interesting opportunities this year and in the immediate future. Curious global investors might want to consider taking a look at some of these frontier markets that are often overlooked by others. In this video, we'll talk about 4 markets that should be on your radar in 2026. Vietnam is one of the countries that we're quite bullish on. The country continues to grow, liberalize, and modernize, and is considered by many to be the gold standard for frontier markets. The country is expected to be upgraded from frontier status in September this year, and the country is expecting about a 6.3% GDP growth in 2026 and hopes to reach upwards of 7% by 2028. Vietnam is currently one of the primary beneficiaries of global supply chain diversification. As firms move manufacturing out of China to avoid tariffs, Vietnam's electronics and textile exports are surging. This could offer an intriguing opportunity in industrial real estate and logistics. The country also has a fast-developing fintech sector, and even areas in the deep countryside are getting online fast. The challenge for international investors is that options are limited to ETFs that track Vietnamese indices, which can limit upside due to ownership restrictions. Foreign investors can, however, open up Vietnamese brokerage accounts, so investors who are serious about investing in Vietnam may want to take a trip to the country and open up a brokerage account to do so, a point that we've talked about elsewhere. A country that we've yet to discuss on this channel but we find very interesting is Kazakhstan. Kazakhstan is positioning itself as a middle corridor connecting Europe and Asia, bypassing Russia, and the country expects a 4.5% to 6.5% GDP growth over the next 3 years. The country's flagship airline, Air Astana, has already benefited from European restrictions on Russian flights. Globally, a high demand for critical minerals, uranium and rare earths in particular, and the expansion of the Tengiz oil field are expected to be a major contributor of this growth. Additionally, its banking sector is among the most digitally advanced in the frontier world. Interesting for many global retail investors, Kazakhstan is one of the more accessible frontier markets because several of its major companies are listed on Western exchanges. You don't necessarily need a specialized Kazakh brokerage account to get exposure. Kapsi is listed on the Nasdaq, while Kazatomprom and Halyk Bank are listed in London. There are also companies like Freedom Finance, a broker active in Kazakhstan, who provide retail investors relatively easy access to Kazakhstan exchanges, although your exact access will depend on your individual circumstances. We've yet to talk about Africa on this channel, but we are indeed very interested in many African countries. Kenya is one of these countries. Kenya remains the economic engine of East Africa, and its economic outlook is positive and resilient with moderate but stable growth forecasts. Most major forecasts show Kenya expanding in the 4.9% to 5.3% range for 2025 to 2026, which is well above the sub-Saharan African average. This is supported by services, agriculture, construction, and credit-led investment. This moderate growth is significant in a frontier market context. 5% growth sustained over time can translate into meaningful investment opportunities relative to developed markets, especially when paired with the demographic growth and ongoing reform efforts that Kenya is currently experiencing. The country's macroeconomic environment also remains attractive, and the economy is driven by diversified drivers in services, tech, mobile finance, agriculture value chains, infrastructure, and tourism. What's interesting again with Kenya is that foreign investors can legally own shares in Kenyan companies, albeit with some sectoral restrictions. Kenyan brokers like Dreyer & Blair, SBG Securities, and NCBA Investment Bank help facilitate this for international investors. The Kenya government also offers government bonds to global investors, and historically these have carried some of the highest yields among frontier economies. Rounding out our video today is another African country, Egypt. Egypt is entering a high-growth phase following aggressive structural reforms backed by the IMF. Growth in 2026 is expected to be around 5.6%, up from 4.4% in 2025. One of the reasons Egypt might be interesting is that there's ongoing large-scale privatization of state-owned assets and massive foreign direct investment, particularly from the UAE. This is fueling construction and growth throughout the country. Demographically, the country has a population of about 107 million with a median age of 24. The demand for digital banking and retail is explosive in the country. Moreover, if Egypt makes it onto a new JP Morgan Frontier Bond Index, more big funds would be buying its debt, and a recent S&P upgrade makes Egypt look like a safer bet to a wider group of investors, as long as the government keeps up its reforms. The main risk in Egypt is that the currency could weaken again, and that heavy debt and refinancing needs could force painful austerity, both of which would hurt returns. Currently, retail investors can invest in Egypt through Middle East ETFs that have Egyptian exposure, purchasing Egyptian government bonds, and through a local brokerage account. To get direct Egyptian stock exposure, you would need to open an account with an international broker that offers access to Egyptian exchanges, or with a local Egyptian brokerage that could sponsor a foreign account. In practice, this means a lot of extra paperwork, proof of identity and tax status, and a slower, more old-school trade settlement than you see in the US or Europe. That concludes our video for today. Thank you for watching, and once again, please check out Vina Edge for more information on emerging market living and investing. This is for informational purposes only, and this is definitely not investment advice.